Check the list of top shareholders for the world's most valuable tech companies, and one name appears at the top of the pile almost every time. You see it right there behind that glowing Apple logo. Look at the pharmaceutical and healthcare sectors, and you find the exact same firm holding massive stakes in giants like Pfizer. They are a lead shareholder in the brands that fill your pantry, right down to Coca-Cola. The company is BlackRock, and they currently manage $11.5 trillion in assets. This chart shows the total economic output of major global nations. That $11.5 trillion dwarfs the gross domestic products of Germany, Japan, and the United Kingdom. This scale has fueled a viral narrative across the internet. The claim is that BlackRock functions as a shadow government, purposefully buying up the globe to dictate a new world order. However, that theory relies on a misunderstanding of how the legal definition of ownership actually works in modern finance. Legally speaking, BlackRock is a passive investor. That $11.5 trillion belongs to everyday pensioners, retail investors, and people holding standard 401k retirement accounts. The architect behind this system is Larry Fink. He began his career on Wall Street in the late 1970s and eventually built an empire by aggregating this capital. This creates a paradox. If Fink's firm only passively holds our retirement money, how does he exert influence over corporate America that rivals the power of a president? BlackRock's true power comes from exactly what holding that money legally entitles them to do behind closed doors. The driver of this influence is the exchange-traded fund, or ETF. It was the low-fee revolution that largely replaced active Wall Street stock picking. This is how it works. When a retail investor buys one cheap slice of an ETF, that slice represents a basket containing tiny fractions of the entire stock market. Your single dollar flows in and splits into dozens of tiny lines, connecting to various corporate shares. When millions of everyday workers pour their money into that single ETF bucket, it aggregates those small sums into massive institutional buying power, managed exclusively by BlackRock. But the ETF contract contains a specific trade-off. The retail investor receives the financial profit from the stock, but they surrender their shareholder voting rights. Those voting rights are severed from the financial return and route upward, straight into a centralized BlackRock hub. The rise of low-fee index investing centralized the voting power of the American public into the hands of a single asset manager. We can see the activation of this power in BlackRock's recent push for environmental, social, and governance, or ESG, mandates. Larry Fink has used this centralized voting bloc to pressure corporate boardrooms. He forced companies to adopt specific green policies almost overnight by threatening to withhold the firm's support. Because they control the votes for trillions of dollars in shares, BlackRock can swing board elections and replace executives across the S&P 500 without spending a single dime of its own corporate treasury. This power is the outcome of a massive legal consolidation, the transparent execution of millions of aggregated proxy votes in mundane boardroom meetings. This generated an immediate political backlash. Conservative states began pulling billions in state funds to protest the ESG mandates, while environmental groups argued the firm's actions didn't go far enough. Faced with boycotts, BlackRock quietly executed a retreat from the ESG label, proving the firm is still subject to market pressure. However, as the focus shifted away from ideology, BlackRock revealed its role as the operating system of global finance. They developed a proprietary risk management software called Aladdin. Today, the Federal Reserve, the European Central Bank, and almost every major financial rival use Aladdin to analyze and manage their portfolios. Because the Federal Reserve and every major rival depend on Aladdin to manage risk for tens of trillions in assets, BlackRock functions as a systemic utility. A state might pull its pension funds, but the global financial system remains hardwired into Larry Fink's servers. By integrating into public infrastructure and private retirement accounts, the firm has established a monopoly more absolute than traditional corporate ownership. This brings us back to the fear that a single corporation is buying up the entire world. The reality of modern capitalism: true ownership is decentralized. The global economy is split among millions of diverse people, everyday workers and retirees holding index funds. But while the ownership is scattered, the voice of that ownership has been centralized to a degree we have never seen before. BlackRock doesn't own the world, it simply holds the world's proxy card.